Okay, good evening. The title of my presentation this evening is Director Deals. What are they and how can they make you money? It's also quite well timed because we just heard from the previous company on the panel that their directors are investing £1.5 million into their own stock. So it's worked out quite well from that perspective. Here's a quick disclaimer. I'm going to assume that you're all speed readers in this room and move on to really why are we focusing on director deals. It kind of follows on from a month or so ago where I talked about companies which were respected by chief executives in their industry. And it's really a kind of key part of the thing that we're trying to do at Shares, my colleagues and I, to really find good quality ideas for our readers and for people who attend our events. And I think that's quite important. Finding a source of high quality ideas is clearly vital for being successful in investments. Investors in this country have got around 2,000 securities that you can potentially look at. That's a huge number to be able to go through. And what you really want to do is to narrow that menu down into a reasonable number of options that you can look at it in more detail. And you know, if you can get it down to the top 5%, if you can get it to the kind of Michelin star kind of part of the menu that you're picking from, then your results should be a little bit better than average, and that's what we're all trying to do when we're picking stocks in the market. You can own the other 95% if you want. It's kind of the Wetherspoons menu. It's going to be a little bit average probably, but you can still do very well from getting average returns in the market. But what we're looking at Shares Magazine is how you can find these little bits of extra return potentially through things like director deals, through looking at high quality companies, value companies, and other areas we've looked at like spin-offs, special situation transactions, where you can maybe get 2 or 3% on top of the market. If you can find enough of those, then you're going to get great results. So today I'm going to look at director deals. What are they? Why do they offer potential? And which directors have been buying shares recently and which ones should we be looking at in more detail? First of all, what is a director deal? I'm sure many of you will be quite familiar with them. When directors are buying shares in their own stock, it's generally considered to be a very bullish sign if a director is buying shares in their own company for a couple of reasons. First of all, if you think about it, you're an employee of a company. You're already kind of reliant on it for a salary. If you're going to put money into it as well, you've got two sources of risk. You've got your income and also your investments. So to put money into a company that you work for is quite a big statement, and there's got to be a lot of reward on the table for you to take that risk. And so that's why they're followed very closely by directors. You can see this table at the bottom is the most active directors over the last 12 months. You can see Andrew Whitty at Glaxo is the top one there. He's made 22 deals in the last year. And this is one of the issues that we find with tracking director deals. They're all announced to the stock market, but a lot of them are completely meaningless. So we've really got to work hard to find the bigger deals, the interesting deals, and we've got to wade through a lot of material. And one of the ways we do that as Shares is we have probably, I think, the only online tool on the market where you can go through, search by director, by company. And if you go onto our website, you can find that tool. That's where a lot of the research in this presentation has come from. So, does following director deals make a difference? There's actually quite a lot of research on this topic from academics. You can also see on the right-hand side, there's a chart with some companies where there's been director dealing over the last 2 or 3 years. I'll come back to that later, but that's essentially the returns from the stocks after the director deals that have been featured in Shares Magazine over the last year. So you can see there's some big winners, there's a few losers, but on average, there's a positive return there. But on the academic research side, there's the first piece I picked out here is a piece from Boston University. It was done in 1999, and they looked across 3 decades worth of data in the US. And what they found was, if you just simply formed portfolios on companies where there was a lot of director buying, you could earn 0.4% per month on top of the market return. So that's a period when the S&P 500 went up between 10 and 15% annually for those 30 years, and you're adding kind of 6 to 10% on top of that, just from a pretty dumb portfolio where you're not even thinking about it. More relevant to all of us in this room is a more recent piece of research on director deals in the FTSE 350. It was published, I think, in 2009. It was done by analysts at Bank of America and Citi. And what they found was in the FTSE 350, on days 1 to 20 after a director deal was announced, there was an absolute excess return. So that's, again, the return on top of what the market gave you already of around 2.9%. Over 120 trading days, so that's slightly less than half a year. Annualized, that means you're earning 6% above the market return. And again, they haven't looked for which director deals are the most interesting or informative. They've just taken a blanket approach. Wherever there's a director deal of a certain size, they've done their research on that basis. And finally, while I certainly wouldn't call it academic, we've also done our own research on some of this. That panel on the right-hand side shows you the returns of these stocks, which have been featured in Shares Director Dealing section, which we have every week. And what we found was that over a 2-year period, the average return on directors who were buying, on the stocks where directors were buying, was around 2% better than the market. And that's excluding that biggest gainer at the top, Daniel Stewart, where the gain was 800%. It clearly skewed the results. So he pulled that out, and that you've still got 2% annualized over the market return. One of the interesting things we found, and this is on quite a small sample size, but most of the academic research shows that director sells tend to have no impact on a company's share price. But we actually found that when directors were selling, the share price significantly underperformed against their small cap benchmarks. And this was focused on small cap stocks, not large cap stocks. But essentially, we found that it's a good idea to look out for directors who are buying shares in those companies, but it's also important to be a little wary when you see very big sale transactions. So who's been buying? What we can see is that in the week after the referendum result, it was the biggest week of director buying in the last 10 years. Right. So so directors of companies know when they're getting value from their own stock. And you can see on the panel at the bottom, there's a list of the returns that they generated, I think is in the period to the end of August. And not one of them lost money. And there's some pretty spectacular returns in there. And clearly, there's a couple that are actually on the Monday after the referendum result. And there's a lot of good returns in there. You can see by sector, there's a focus on housing and property. So Anthony Pidgley there at Berkeley, the biggest one, John Morgan Sindall. There's ICAP as well, which I'll come back to shortly. And a couple of financials and British Land in there as well. But there was a huge amount of buying after the referendum result. And obviously the stock market is up quite a bit since then anyway, so they've ridden a rising tide, but obviously there's been some good returns made. So this is the one that I wanted to pull out of that list, ICAP. This is a company which we've covered a lot in shares over the last few months, since really it announced its deal with Tullett Prebon. And the reason that we've been focusing on it is because it combines two really interesting features. First of all, obviously, you've seen the director deal by Michael Spencer. It's around close to £1 million at 393p a share. The stock's already trading, I think, around 470 now. But what's interesting about this deal is, as well as having director dealing, Michael Spencer is the founder of ICAP. They're doing a spin-off deal, essentially, where some of their assets are being sold to Tullett Prebon, and the investors in ICAP are retaining what's left of ICAP, which is actually a very high-margin financial technology business, which you can see on the panel on the right-hand side. So you can see what ICAP is at the moment is in the left column. That's the old ICAP business. If you're a shareholder in ICAP, you still own that, but you're going to own it as part of an enlarged ICAP tullet, and you're going to be left with this on the right-hand side, which, as you can see, is an exceptionally high-margin business with very low debt. And it's a business which Michael Spencer himself said he thought could be worth ICAP's current market cap combined. So you're going to have that, plus you're going to have a shareholding in ICAP tullet. So it's a potentially very value accretive deal for ICAP shareholders. We've been writing about this, obviously, since the transaction was announced. And clearly there's been some value created there already. But I think when you're combining these elements of obviously director deals and spin-offs, which both historically have been shown to outperform the market, you can potentially get very good results. And obviously 20-25% gain in the share price already shows that some of that is being delivered. So I suppose just an overview of what I'm talking about here. Obviously we've seen that director deals can be tracked via stock exchange releases. Some of the releases are more useful than others. And you can obviously track those online at Shares, where you can browse around what the deal history of some of the directors is. We've seen that director deals can potentially deliver returns on top of the market return that you would ordinarily receive. And while a director deal isn't a reason to buy shares in itself, it can potentially highlight some very interesting opportunities for investors. And I think the other thing I'd just point out is that we're talking about quite fine margins here. As we said, 2.9% over 120 trading days. Can you actually realise that? But I've just done a final slide which just shows the difference that even a small margin on top of the index can actually deliver to your investment return. And so we've got the black line, which is a FTSE All-Share actual return over the last 10 years, just up to basically where we are now in 2016. And what you can potentially get just with a 3% improvement on top of that. And so I think what that shows is it can be quite meaningful. If you think about one of the best investors of all time, Warren Buffett, he's only actually delivered 10% above the market for his entire career. Then if you can just use one of these methods of director deals to get a third of that, that can be really useful for you when you're looking at investment opportunities. If you can find other areas, the other areas I talked about, around spin-offs, around high-quality businesses and value businesses, then you're really going to get a lot of benefit from and potentially good rewards from your investing. So I hope that's been helpful. I'm more than happy to take your questions. Thank you very much.
Thank you, Will. Do we have any questions for Will? Gentleman at the front here, please, Chris.
I mean, for the novice investor, if they wanted to follow this method, I mean, there are quite a few questions, but one that occurs to me, if you notice that a director has bought in shares into a company, is there a kind of rule that you should buy, as soon as they have bought, or, does it matter if you buy a month later, or,
Okay, yeah. So the question is, when do you buy these stocks after you've seen director dealing? I think what I'm saying is that I think what this does, if you've got companies where directors are buying shares, they're not that common. There's not a huge number of them, and there's certainly not very many of them buying in big quantities. So if you just go to that list of stocks where there is a lot of director dealing, you're probably going to be looking in the right place to find good ideas. Sometimes they can do terribly. I showed on that slide that almost half of the companies, their share prices actually fell, but the winners are the ones where you actually where the positive component of that excess return came in. So I'm trying to say that there's nothing that I'm saying today or there's certainly nothing in a director deal that you can make a transaction on. But as I showed with ICAP, for example, that's going to draw your attention to a business where the management is very well aligned with the shareholders, and they can see a gap in value between what the company is worth in the market and what they believe the company to be worth. And they wouldn't take the risk if there wasn't a big enough gap. So that's the point. So I think it opens up ideas, and I think it's a good area to keep an eye on.
Will, you said that a director deal in and of itself isn't a reason to buy. Do you think it might be a reason to sell? And looking in the last couple of weeks, I think plus 500, the directors all realised a huge amount of money. I think it was 100 million of director sales. So do you think it would be a reason to sell a company if the directors started selling out? Or again, do you think it's just part of a bigger picture?
Well, we do have this debate quite a lot, me and my colleagues and I, about, there's a big sale. There's Accesso, I don't know if anybody's familiar with Accesso, a technology company recently, where there's a very big transaction. And I think, you can look at it both ways. Certainly people do want to access liquidity. They want to get out of the stock market to a certain extent. And the guys at Accesso have clearly earned it. Their stock performances have been outstanding. But what I would say is that, if you look at plus 500, which you just use as the example, you can go online and you can search plus 500 at shares. And I wrote, because I cover plus 500, and the founder of the company, Alan Gonan, said that at this price I'm going to sell shares in a newspaper interview about 2 years ago. So we'd already published the price that they were going to sell at, and they sold at that price. So, it's kind of, it tells you a lot about the amount of value they see in the business. And for an entrepreneur, like a founder of Plus 500, he's made a phenomenal amount of money building that business. But that's not just, but he wants to get the return that an entrepreneur should get, which is very large. But for investors, you don't need to get the 80% a year or whatever he's had from owning that, from building that business. If there's still 10 or 20% a year left in plus 500 for a period of time, and it's still growing very quickly, then there's no reason specifically, but it is definitely something to keep an eye on.
Any other questions?
Very interesting presentation, thank you. Have you done any research into any differences between the type of directors who buy, for example, chief financial officer versus the kind of person who's the head of the company? Is there any difference between those kind of buys in terms of performance?
Yeah, that's a really good question. So one of the things, so I've been with Shares for a couple of years, and we have historically been covering, we've got a database of these director deals going back 10 years, and on that website, in Shares, there is chief financial officer deals. And I kind of was having this discussion, why have we got chief financial officers? Why are we singling them out for director deals? And the reason is that there is also research which shows that actually finance officers have got a better record in calling their share price than chief executives. and so there is a difference. I think we would generally focus on executive directors rather than board members, typically. And finance officers, the research says, indicates that it has the most information content about future value, essentially. Yeah.
And just remind us when directors are restricted from dealing, because there are times, am I right, if they're aware of, well, I don't know the exact rules, Will. Do you know the rules and when directors are allowed to buy and sell?
So there are, there have been a few cases where I don't think there's specifically rules which prevent directors from buying shares. I remember a little while ago, Chief Executive of Tesco, Dave Lewis, was getting a lot of flack from investors for not owning any shares in Tesco after he'd been appointed. And what he essentially said is that when they were selling a lot of assets, and in negotiations, he said that there was too much kind of material information that he was party to in those discussions, that he would have actually been kind of compromising himself by buying shares in the company until those negotiations had been concluded. And so that is essentially, so he did buy shares eventually, but he did it after a set of results when the numbers were in the market, the acquisitions were in the market, essentially. So there could have been they couldn't level that criticism at him that he'd bought the shares on the cheap or what have you. So I think there are certainly rules that directors can't deal when there is material information they haven't disclosed. All information has to be disclosed. And I think the recent rules, the MiFID market abuse regulations which came in recently, now mean they actually have to state in the releases that there is no material information. But I think you would expect that anyway, and I don't think for me, I don't think directors are buying shares because they've parted some inside piece of information. All the information is there, but you can see that, but they know what their business is worth, and if it's not reflected in the market, then why wouldn't you take advantage of it?
Question here, please.
Cheers, actually. That's a nice presentation. I just want to find out, actually, because from your presentation, you did highlight that if a director, executive director, as you said, is buying the shares, it's a good fundamentals to buy shares in that company. If for a long-term investor, what are the fundamentals to look out in a company? To look out in the company, whether if the company has good fundamentals to buy shares, actually, what are the things to look at apart from director buying the shares?
Yeah, absolutely. I mean, because that's exactly the point that I've been trying to make, essentially, which is that you can't really do a transaction off a director deal, but it can highlight a situation to you where if you already know the company, you like the business, and it's a high-quality business. I pointed out the ICAP Newco business, which is this business with really high margins. But that to me looks like a really interesting business. So when I see the director, the founder of the business also buying shares, then that's going to obviously make you want to look into it in more detail. And so the fundamentals, I mean, the things that I would look for are obviously, high margin businesses are typically quite good businesses. They don't have to be phenomenal margins. You kind of in the high single digits is good margins, and then clearly things like return on equity, so the profitability of the business is very important. But you could talk for a long time about what makes a good company and what's the thing you really need is a great company and a really good price that you're paying. So as low a price as possible, basically, and those are the two key things. So those are the things I would say to start with.
Any other questions, please?
What about the conundrum of the so-called closed periods? Very often you're not aware when the closed period is. I mean, for each share, there's so much that you have to find out actually to ascertain whether it's the right time to do it.
No, that's right. I mean, I don't know. There's probably. I think there are certainly rules around when you. I think probably you're not allowed to deal right ahead of results. But I mean, I'm sure I've seen companies which have dealt where there's been director dealing and then a trading statement a week afterwards. So I don't quite know how that works. But yeah, I think generally speaking, there's not supposed to be any commentary to the market in that week before a results update or a trading statement. Yeah. Sorry, a month. Yeah.
A question here, please.
Thank you for your presentation. If a big transaction is taking place, for example, somebody is selling £10 million worth of shares of a company, he definitely can't do it online. He must go to the broker. I presume he would do it over a few days without affecting the share prices significantly. Could you comment on that?
I mean, I think that typically when there's a very big deal that goes through, I think I've seen a few in a company called Regis, which is a big kind of office space rental business. And the founder there has a massive stake, and when he wants to sell shares, he kind of has to go to JP Morgan or Bank of America to get them to find the buyers. But I mean, typically the really big deals, they are kind of auctioned off almost to institutions. And I think most directors, if you're an executive at a business, I mean, I don't know, but I wouldn't have thought you would sell so much stock on the market that it's going to affect your share price, because it's not in your interests, obviously, to dump it all and destroy your own share price. So I think typically they would do it via a deal with institutions where they'd buy them out. I mean, there was a Brooks Macdonald as an asset management company where the founder sold some shares, and he sold his shares to institutions at a discount to the then price, which didn't do a lot for their share price. But that's, I think, typically the way it's done. Does that answer your question?
We've got time for one more, if anyone else would like a question. Gentleman here for a second, Chris.
Cheers. Thank you for the response, actually. I just want to find out as well, when you spoke about the company directors, the executive directors buying shares, which is a good sign of buying the shares in that company, where can we look for a reliable source of getting that? If, for example, if the company director is buying the shares in that company, where's a reliable source one can source that?
Yeah, well,
find that?
that's a great question because it just gives me an open goal to present, to pitch our product, which is, so Shares Online, sharesmagazine.co.uk, you go to Tools and Director Deals, and you can search by director. You can see what shares they've bought over the last 10 years or more, and all the transactions within a business over the last 10 years. And that, that's really helpful for us. We use it a lot for research on stories. We found certain directors. There's a guy, the company's gone off the market now, British Polythene Industries, where the chief executive there had a flawless record in buying at the right time and selling at the right time. It's phenomenal, and you could just look at it down this list. He was buying all through the early 2000s. He was selling, 2006, 7, buying again in 2008, 9, and so. And so it's really useful from that perspective. It's online shares. You've all got access to it. So I'd definitely say it's worth checking out.
Thank you very much, Will. Thank you.